Thank you so much. And it's an absolute pleasure to be here today and to have the opportunity to discuss a topic that is so critical, not only for the future of businesses, but for the future of our world. Because I think, as we all know, the business landscape is rapidly evolving. Stakeholders, whether that is your customers, your investors, your bank, or your regulator, they are increasingly demanding that companies consider their impact on both environment, society, and the broader governance structures within which they operate. So the emergence of ESG as a guiding framework is not merely something that is going to pass us by as a trend, but it is a pivotal shift in how businesses are going to have to operate to stay competitive, resilient, and responsible. So I think we can move to the first slide, because to understand why ESG is so important, we're going to have to look at, like, briefly the landscape that we're operating within, right? And we've just heard about the role of social entrepreneurship, the forgotten path of environmental sustainability, resource management and education, and how AI and technology is really shaping the way forward. But actually, I'm just going to take a step back. So, because I'm sure everybody has heard a lot about the concepts behind sustainability and ESG, and you've probably seen all these ESG factors a million times. But what most people tend to forget is sort of the essence behind these concepts and the objective that we're all trying to achieve, right? So I like to think of sustainability as the destination. That is where you want to arrive. That is your end destination, so to say. And that means that you need to utilize ESG as the way that you're tracking your progress towards that journey. So in practical terms, you're seeing your sustainability journey through the lens of data, your ESG data. And sustainability is going to be your broader mission and vision for where you want to end up. But most importantly, what is the end goal? And we're, of course, working here towards impact and creating a more sustainable future for all. And I think we've heard that also multiple times throughout today, right? But here I just want to pause just a second, because what does impact really means? I think if you look it up in, for instance, Cambridge Dictionary, it states that it's a powerful effect that something, especially something new, has on a situation or a person. And isn't that exactly what we're trying to achieve? We all know that to sustain our planet and, well, to basically actually save mankind, we need to change the way that we're living, right? We need to change the way of business. And that also means a shift from the traditional business model over to a more sustainable business model. But again, what does that come down to in more practical terms? Well, if we look at the traditional business model, it tends to focus more on maximizing shareholder value. It looks at the short-term financial performance of a company. Whereas if we look at the more sustainable companies out there and their sustainable business model, they're more focused on integrating ESG principles into the core business operation. They're prioritizing sustainable practices, and they're really engaged in stakeholder dialogue. When it comes down to taking decisions in these two very different business models, for the traditional side, it's mostly driven by profit margins and market share, to be honest, right? Whereas if you are engaged in a sustainable business model, you're running the long-term game, the long-term perspective, but you're also focusing on balancing profit, but with purpose. It's not that you are just becoming a nonprofit organization, you still get to balance those levels. So, what are the benefits a company can reap from having one or the other business model? Well, in the traditional lens, it is a more immediate financial return, and I think we also heard that when Audrey was speaking, right? The how to convince some investors to go for the more sustainable portfolio. If you're only looking through a lens of 1, 2, 3, or 4 years, you are very focused on the financial return. But on the other hand, if we are looking at the sustainable business model and the sustainable companies out there, all research point to the fact that they are winning on a long-term scale, so over 5 and 10 years. They do see an increase in investor interest, up towards 20% of an increase. They reap benefits from improved brand loyalty and increased revenues. Just the other day, I saw an article describing that it's all the way up towards 9.7% in gained revenues. So there's a lot of benefits to reap out there as well. With benefits, you always have drawbacks, right? So in the traditional business model, the drawback is really here to overlook the long-term risk. While it cannot lead to reputational damage and regulatory fines, for certain industries, there's also a high risk of becoming what we call a stranded asset, something nobody really wants to touch. And it's something that we're talking a lot about in banking, right? We're seeing a lot of banks divest and make exclusions in different industries. So that is also a real risk to be aware of. If we're looking at the sustainable business model, I think what you'll hear most of the time is that implementation can actually be rather costly. As Diana also just talked about, measuring impact can be rather complex, and it can require robust reporting mechanisms. So that exactly takes me to the next slide. So thank you, because if we're then going to look at how does that integration even look in an organization? Well, again, I'm sure you've seen these E, S, and G factors, but I think what most people maybe not have considered is, what does that even mean for the ESG team? Well, in fact, the ESG team, in order to integrate into the core of a business, needs to work across all departments within an organization. And that means they need to be risk managers. They need to be the business development. They need to be very analytical and data driven. They need to be project managers, but they also need to be strategics, and they need to work with different stakeholders and so much more. But what it boils down to is that the integration of ESG, in order to become this long-term and resilient business, you're going to need change agents, and they need to be employed within that ESG team and work across your organization. Because if you do not treat sustainability and ESG as a transformation, you'll not be able to unlock the benefits of a sustainable business model. So with that said, we can go to the next slide and look a little bit closer at what are then the different steps that you can take in order to integrate ESG into the core of your business strategy. Well, essentially, you can actually break it down into 4 steps, because it starts with you assessing the current ESG performance. So conduct a comprehensive evaluation and use some of the metrics and benchmark already out there. And of course, speak to your stakeholders, align with their interest. And then for the next step, you go into setting clear ESG goals. Establish those specific and measurable goals, but it has to also reflect your organization's commitments when it comes down to your ESG principles. And then you start to integrate these goals into the overall business strategy and communicate about it across all levels. So when you come to step 3, you're then going to start implementing the ESG initiatives. And here you can adopt some of the well-known sustainable business practice out there, which could be by improving supply chain transparency and really engaging your employees and stakeholders. And then finally, you get to the last step where you monitor and report your progress. So you need to track it, you need to assess it, you need to derive at that impact. And the best way to do it is by using KPIs, but then also communicate about it. I know we heard about greenwashing and green hushing, but unless you communicate, unless you take accountability and responsibility, you're not going to be able to also aim for that continuous improvement. So now the avid listener and participant here will have noticed that around each symbol for each step, there's actually an arrow. And that is to symbolize that this is a continuous circle, because it's not just around completing these 4 steps and then you're done. No, it's a long-term business strategy. So you complete these steps and then you start all over again. And that takes me a little bit into the last slide here, because if we're looking into the trends that we're seeing within 2025 and potentially also for the next coming years, right? When we're talking about incorporating ESG into a long-term business strategy, it's not just an ethical imperative. It is a business necessity. The landscape is shifting, and companies that want to succeed in the future will also be those that have recognized the importance of environmental sustainability, social responsibility, and strong governance in driving long-term value creation. So by integrating ESG into the heart of their business, companies can manage these risks and unlock new opportunities, attract investments, and build stronger relationships with their customers. So it is a journey, and it requires commitment, adaptation, innovations, and so forth. With that said, I think the most material trends that we are going to see this year, it is a focus on AI and technology. It is going to be on the regulatory pressure. Well, I don't get me started on Trump and the omnibus that's going on right now, but we are seeing enhanced reporting pressure. And that means also a pressure for data accuracy and taking accountability. And it's something that we as a bank are also sort of asking for our customers. We want data, because if we don't have data, we're not going to be able to assess the ESG performance of a company. And there's so much more. But I think in this pivotal moment in the business world where everything is changing, we need to remember and embrace that ESG is not just a framework or is something that is nice to do, but it is a catalyst for creating a future for everyone that can be both prosperous and responsible. So as a closing sort of remark, there is one thing I want to leave you all with, and that is repeat, repeat, repeat. Repeat training and awareness. Repeat your evaluation of your ESG integration. Repeat the development of ESG initiatives. Repeat reporting to enhance quality, and so forth. Everything is going to have to be on repeat, because it's a moving target and it's a continuous learning path to be on for all of us. But I truly believe that if we strive for impact and being a responsible business, we are way better off than if we don't. Thank you.